Hello fellow option traders, this is Jeff, and this is a special video that I'm making for a reader by the name of Tom, who sent me an email and asked me if I could take a look at a position that he has open right now that's in trouble. So he actually sent me his user ID and his password, which I guess you can do that if you want to. Just if you have a live account, that's not a good idea. This is a paper trading account, but if you have a live account, it's not a good idea to send that to me or to anybody, you know. But I believe he just has a paper trading account, and I want to let him know that if he opens a live account, he better change his password. So that's done with. So his position is on TLT, and when I open up Thinkorswim, this is what I see. I have TLT up here in the box. He's got, he has a limit. He wants to keep his risk level at $5,000, or, you know, that he has maximum $6,500 in his account. He's pretending. And if you only have $6,500 in your account, putting $5,000 of it basically at risk on one position or one trade is just way too much. So that's the first thing that's not real good. If we go over to the monitor tab, we can see that it's down $1,000 now out of his $5,000 at risk. I don't know. I could go back and look to see when he opened this, but I'm not going to. So I'm going to pretend like I'm talking to you, Tom. How's that? All right. And here's his positions here. There's he has an iron condor, 50 lots of iron condor on TLT. Too much, too much. So the first thing that we need to do is bite the bullet here a little bit and actually bail on some of these. So I'm going to sync these up here. I'm going to make this red and make this red so that everything stays synced up. I'm going to go to charts and I'm going to make that red too, so we can get a look at what TLT's been doing. Let's change this. I like bars, so we'll change this to, all right, I mean, I like candles. I don't even know what I like anymore. I like candles. I'm going to zoom back out just a little bit here. With the big bullish position that the market's taken earlier this week, we can see that TLT responded as usual by losing some of its value. When the market goes up, TLT being a 20-year Treasury bond fund usually operates inverse to the market. So this was the big day here on Wednesday, I believe this was, and this is Thursday actually. Well, we gapped way down. What are we looking at here? I'm going to be thinking out loud too, so I don't know how long this video is going to take, but I'm going to be thinking out loud. We're on a daily chart. Let's go in here a little bit. So this is Wednesday, Thursday, Friday. So Friday, or Thursday, there was actually a little bit of a pullback, and there was a slight gain on Friday in the overall market if we were to take a look, say, at the spiders. But it does sort of look inverse in certain aspects to TLT. So I guess we can still say that that holds true. All right, so had a little bit of bad luck, but I'm a big believer in not panicking when a trade starts to go bad. But let's see what we can do. Here is the risk profile. Make that a little bit bigger. So you can see that, Tom, you're right about a little bit past break even here on expiration, which would be January, which is actually next week, I believe, isn't it? Expiration next week. Yes, it is. So you have 2 weeks for this to come back a little bit, and it may or it may not. you have, after you collected your credit on this trade, you have $3,350 at risk. So you could lose $3,350. We see that you are currently down $1,000 right now. All right, what can we do? Well, the first thing we should do, I mean, here's another problem with if you have $6,500 to trade with and you have $5,000 already, Thinkorswim's not going to let you use anything more than $1,000, so there's really nothing you can do correction-wise here, unfortunately. So what I would do, first thing I would do is lighten the load here a little bit, and I'll just click on this first one, this first position here, and then hold down the control key and click on the next one, right click, and say Analyze Closing Trade. All right, we need to get rid of some of these. So I'm proposing that we say like get rid of 15. So that'll bring our max loss down to 2,600, which is roughly half of your available funds. And we do want to get rid of the other side so that we have the appropriate amount of money to play with. So we'll do the same thing here. And we're going to, oops, that's the whole iron condor. I don't want to do that. Let's do that. And we'll say 15. Come on. All right, so you have to get rid of this side of it, even though you're only going to pay a penny for it because it's not really worth anything. It's these positions that are way up here, and they are not worth anything if you look at this. You can see here, this is your long position that you paid 35 cents for, and it's worth 3 cents now. And this is your, I do this by right clicking here, or no, I just click right, let's see, what am I doing here? There, you just left click on it. And you collected 23 cents for this one, and no, you collected 23 cents for this one, and it's only worth 2 cents. So the midpoint between the two, or the midpoint for the whole vertical, is going to be a penny. You'd be lucky if you can even get out of this, but you need to get out of it in order to clear out the money over here in the buying power effect. We may have to boost this up to even more than 15 shares. All right, so the next thing that you want to do, let's say that you sold those, and we'll just leave them down here, and it looks like as though we've actually done that as simulated trades. We'll back over here and we'll add some more simulated trades. We'll want to go out to February. Move this down so I can see more. We want to do maybe 14 strikes, let's say, and I want to see delta, so we'll come over here and we'll select delta. And so what I'm looking for is something with a delta around in the 20s, the lower 20s for my short strike. So we right click on that and we say sell a vertical, and then that's on the put side, and we want to go on the call side and look for a delta. Here's a delta of 25. There's more risk to the downside, so we're going to take a little bit more delta on the upside, and we'll say sell vertical. All right, so excuse me, we are bring this up here. We're collecting 41 cents on this particular trade, but I propose, here's what I propose, is stretching this out and doing a couple of extra strikes. So this is this will bring you up to 48.85. If we take those off of there, we're at 42.95. But we have it down here as 10. So we'll do 10 of those, and we won't, like put all our eggs in one basket here. So at 114, let's do this 3 away. So let's make this one 111. Let's see what we come up with. And this one, we should make a 3 away. That's a 125. Oh, great, I can't see this. Move this thing. 125. You can't see it, but I'm actually scrolling down here to get the 120. Oops. What did I do? What was that? That was 122, right? Okay, and then this one we want at 125. Gotta pay attention to what I'm doing. All right, so this is a total of a 90 some, darn close to a dollar credit on each one. Now when we look at the risk profile when we do this, it's going to look really screwy. But the point that I'm trying to make here is that it costs you 53 cents to get out of this, and then you're collecting $1 to go back in. So you're kind of like, you made $1. I mean, you made 50 cents on this trade almost by moving these down here. So if by just doing a new iron condor in the next month at a as a delta neutral trade, then you're getting rid of some of these deltas. You're really positive delta here, so you're really on the cold side, as I say it, and your downside risk is huge. And when we add these trades in here, we knock 200 deltas off of there and make it a little bit more palatable and still able to be in the game if it moves back up. So let's take a look at the iron condor that I just proposed that you do, Tom. We'll hide the positions and we'll shut these off. So this would be your new iron condor. Let's do probability out to February, and you're pretty comfortable in the probability range here. Your break evens, you're at 80% probability. So of staying between the break evens, you're 19 here and 19 here. So that's pretty good. Your delta's a little bit up, but not bad. That's not bad right there. You're collecting a decent amount of credit. You're only putting on 10 shares or 10 lots. And if, for instance, things continue to deteriorate for you, then you would continue to bail on these and getting out slowly, because the market wiggles around and it may just come back up. And you can see that if you do this new thing here, let me turn these back on. If you do this new thing, you only have to go up to 119 at expiration of 119, and you would be collecting $1,000. So you're still okay if the market moves back up. And that's the way that I would adjust this, Tom. Just keep in mind as you go forward with this that you keep allocating as TLT moves back and forth, and you shouldn't have all this money tied up in this. This is just like way too much money tied up in it. So continue to bail if TLT keeps going down. Right here you're at a $2,300 loss if it goes down to 117.80 at expiration. But if you continue to bail here, you're at a $1,200 loss if you get rid of another 15 or 20, or just keep slowly moving out and then rebuying more condors. You might even want to knock this down to 5. Oops. You might want to even knock this down to 5 and just slowly get back in. Now you're not going to make up for your loss here because you're going to collect 500 and you're going to lose 700 and some here. So you're going to take a 250 hit roughly when you do this. But that's okay because you still have the potential of earning something. And as you slowly bail on these and reallocate into the next month, and maybe in a couple of weeks start moving into March, in small lots like this, lots of 5. Don't go any more than 20 or 25 max, especially when you're doing a, at the 3-strike spread. So you definitely don't want to do more than maybe 20 of these. So that's what I would do. I was, going to do this as an email. And I thought, man, I'm going to be typing forever. It would be so much easier to do this as a video. So when I reply to your video, I will put the link in for this. I'll put it up on YouTube. And you're going to be famous, Tom. Nobody knows who you are, but you can tell all your friends that the guru made a video just for you. Of course, other readers will benefit from it too, hopefully, but you're famous now. All right. Well, Tom, good luck. Let me know what you do and how you work this out. You have a great day, and everybody else have a great day, and happy trading.